All right, check, check, check. One, two, three. Check, check. One, two, three. Can everyone see my desktop and hear my microphone? Excellent, Gabriel. Happy to hear that. Yeah, this market has been an interesting market. So kudos to you for sticking to your plan and following your process. So good for you, Gabriel. What's up, Bruno? How you doing? So hope you guys are doing well. Just again, a mic check and a screen check. If you can see my screen, it's coming in all right. Let me know. Give me a thumbs up or a yes. And if you can hear my audio, there's no echo. If it sounds all right, just let me know. Let's see if I can turn down the volume so there's no feedback. Doing fine. Awesome, Bruno. Haven't seen you in the room lately, Bruno. Everything all right? I know you were in the room in the past, but I haven't seen you in the Slack room. Awesome. Thanks for letting me know. By the way, folks, if you don't know, I do have a Slack chat room that I hang out in during the trading day and sometimes after hours. You can find me there posting ideas. So if you're not part of that room, just let me know if you're interested, and I'll send you a link. You can join us there and partake in the in the discussion throughout the trading day. Some days are busier than others. Some days, I'm active and I'll post a lot of stuff. Yeah, I know. Yeah, if you have a young one, then yeah, good luck with the trading. So yeah, I totally understand. I got two young ones myself. I'm happy now that my son's now 7 and my girl's 4. So they're out of the stages where I have to like watch them all the time. So I guess things are gonna slowly getting they're getting there. They're independent, and I'm getting back into my routine. But yeah, it's still very fun when they're young. But anyways, yeah, if you want to partake in the chat room, just let me know in the live chat there, or send me an email, and I'll send you a link to join the Slack room. Sometimes I'm quite busy in the Slack room. I'll post a lot of ideas and things that I'm trading. Other days I'm a little more quiet, as I'm concentrating more on trading, or I might have other things going on. But it's always fun to have other traders see what they're doing and share trading ideas. So let's just give it 2 more minutes, all right? A bunch of people did say they were going to show up tonight. So I'm going to just give them 2 more minutes, and then we'll get started. We'll launch into, just the purpose of the open office hours, why I'm doing them. Again, happy to have you guys on. Folks who've logged in so far, great to have you on. And, I'll talk about the whole point of this open office hours thing. And then, I'll kind of go over what I'm looking at for the rest of the week. Well, it's only one day left, so for Friday, and but I'll look at some longer term charts as well, which is kind of a sneak peek into the weekly market outlook video and what I'm looking at there. And then just cover some important markets that I think are interesting for the next day and for the next week. This is it's one of those trading environments now where it's really hard to make long-term plans, right? It's not one of those things where you can say, yeah, I'm gonna create this plan for a long-term trade. It's so much news-driven stuff right now that the best we can do right now is stay diligent, stay agile, and like Gabriel said, follow our plan. If you have a plan, and stick with it, right? Especially if the plan has an edge. If the plan doesn't have an edge, then don't stick with it. Stop. Don't keep doing things that are damaging to your account. But if you have something that's working for you right now, if you have a way of approaching the markets that afford you the ability to see things properly without losing objectiveness and the ability to still express your trading edge, then yeah, the goal is to follow that edge, right? All right, I'm just gonna grab some water, guys, and we'll get started just in a couple of minutes here. Actually, just 1 more minute. All right, folks. So why don't we get started? So the folks who join later, they'll join later. This is also being recorded, so folks who can't make it live, you'll also have a recording of this, and hope you can take advantage of it after the fact. So let's launch into things. Let's talk about first, the purpose of the whole open office hours thing. Easy for me to say, and then we'll get into the actual maybe the review process that I usually do, and love to hear for the stuff that's showing up in your guys' trading. So just to kick things off, right? So the whole point of open office hours is really an opportunity for me to engage with you guys. So far be it from me to say, okay, this is a session that's going to be completely dictated by me being the guru and you guys just listen to what I'm saying. I'd love to hear how you guys are approaching markets, where you see the opportunities, and it's all about, as I said in the last open office hours, is really about engaging a broader community so that we all can get better as traders. So when I put together the Montreal Traders Meetup group, what I found to be most valuable is having those different perspectives. People would share charts with me, share instruments, share trade ideas, share stocks that were not on my radar, were not on my watch list. Also, that's the benefit of that chat room. Since I've had that chat room, people share stocks that are just not in my basket. I have a fairly well curated basket. I try not to, I track about 350 or so stocks. But there's always new ones that are coming out that that have decent volume and a good float that need to be in that watch list. So, and of course, I need to have also have the process to actually pair out those or filter out those that are no longer relevant anymore. And that's the benefit of having that community is, we all approach the markets in a slightly different way, even though we may share similar methodologies. If you guys do prescribe to how I trade or, see value in the way that I look at the markets, then we do share some common areas around how we look at markets, but we all look at different instruments in different ways and different timeframes. So, certainly I'd love to hear how you guys are doing. Any questions you might have with the content I'm creating, love to hear that as well. But again, the bigger opportunity here is just the opportunity to engage with you guys and hear what you guys are running into that's working, what's not working, and again just sharing ideas so we can all mutually get better. So that's the kind of the purpose of the open office hours. The vision, again, not a forum or necessarily I have stuff prepared. I want to share some things that I think are notable and interesting. So I have some things I want to share each time I do an open office hours. But certainly if anything comes up for you guys, or you have things that are working for you, or you have charts that you want to share and I can pull up, then just drop it in the chat and be happy to go in that direction. All right, so let's make it a productive hour, or however long you guys want to hang out for and and chat, and let's go through some things. All right, sound good? You guys want to give me a thumbs up if everyone's on board? All right, everyone's on board. All right, thank you. So let's go through sort of a common. I want to go through my common watch list, the stuff I typically share in the weekly market outlook. That's what I'm going to kind of go over first, and then I'm going to share some notable things that I think that were interesting this past week. It's already we're going in a Friday, so the week's nearly over. But man, it's been an interesting week, right? So I think what you can say so far is that after 5 weeks of selling, if we look at the Dow, we had like basically five consecutive red weeks, right? So let me just pull up the Dow here. Where's my mouse? There we go. So, 1, 2, 3, 4. We had 5 consecutive, basically, this is an inside bar, so it didn't quite count, but that we had close to 5 weeks of red, where we had lower lows each week, right? So that was a lower low, lower low, lower low, inside week, lower low, and then this week started as a lower low. So I think after 5 weeks, things probably got oversold. I think a lot of people were kind of leaning in the same direction. And what we saw happen, certainly on Monday with the flip of the month, is we had a lot of short covering. Everyone was kind of in the same trade. And once that new month flipped, and this is what I said in the weekly market outlook video, what you need to pay attention to with time frame alignment is once that new month starts, that's the first opportunity that buyers have a chance to take control of the month, right? And that's what they did. And right now they're in control, right? And in fact, if you look at well, we'll get into it in a few moments. Let's get into VIX first, but some of the indices are very close to reclaiming their quarterly opens, which is a big deal. Because before that, looking, in the last week, it looked pretty bad, right? Like things were heading south, and it looked like it can go a lot further. But certainly, the new month started, and the buyers stepped up, and they forced the shorts to cover for the past 4 trading days. It actually looks like some massive short covering. So let's get into VIX, and then let's talk about that story there first, and then we'll get into the rest of the indices, and then I have some other stocks that are notable. And then again, anything you guys want to bring up, or any stocks you guys want to ask about, feel free to throw them out there. But here's the fun thing about VIX, right? So VIX, this is the pattern I was pointing out in the weekly video. So here on the weekly video, we had this inside bar and down, and so last week it went inside bar reversal. So anyone who got short down here, they got stopped out when it took out this guy's high. And it was going up, right? So it looked like it was going up, and it was going to be possible to take out that high there. It looked like it, because it was also on full time frame alignment. When it's trading above that blue line, it was trading, above the quarterly open. It was trading above the monthly open, and it was above the weekly open. So this thing was, rocking to the upside. The weird thing is, as I said in the weekly market outlook video, is that the VIX had not made a new high, whereas the indices were making lower lows, like fresh lows. This thing did not take out May 13th high. And I thought, well, maybe it just means because there hasn't been enough panic yet. And so this week they had that chance. On Monday, the markets actually gapped down slightly before the buyers completely stepped in. But now look at the week, right? So now what you have happening here is this is a very good opportunity now for this good thing to go outside bar, right? It's very close. So look at that. The low here is 27.76. And the low here is 27.77. So literally 1 penny away, 2 pennies away from making this an outside bar. So, that's kind of cool in itself. It's that, outside bars, sound ominous. At the same time, what we know about outside bars is that means momentum. Momentum usually fades. If it doesn't keep going, it will fade. So it's certainly possible now that, it's momentum to the downside. Next week, you could get more momentum and it'll keep going down. Or, as we'll see in the other charts, there goes momentum down, outside bar down. And I think tomorrow they're probably going to take out, it's only 1 penny. Like, it's 84 right now. Yeah, 76. So you're less than 10 cents away from making a low. This is probably going to be an outside bar because the SPY is an outside bar already on the weekly chart. So if it breaks back down and then comes back up again, that's what you got to watch out for. But again, that's something you need to watch out for. But right now we're not there yet, so you don't have to worry about that. But here's anything, right? So we're back below the quarterly open. So this thing, VIX, is back in full time frame alignment to the downside. So the VIX buyers had their chance when this thing on the daily chart was up here, right? Like last week here, when it went outside bar and up, and it came back in and then went up here. They had their chance to take out these levels, but they didn't. And then this week it opened up, right? There's your new month right there, outside bar, and then they gap down here, right? So they trap these guys. They close it right there, and it gaps down here, opens right there. So they get trapped. And so that's really, that's really nice price action. If you're, it happened across the board this week, right? Yeah, Beyond Meat. Thanks, Maris. We'll talk about Beyond Meats. That's a good one. So for VIX, you see this pattern a lot, and I'm going to share this pattern with you. Who knows? I'm going to ask a question. Who knows about a pattern called the bullish kicking pattern or the bearish kicking pattern? Some people call it a kicker. A bullish or bearish kicking pattern. Who's heard of that candlestick chart or that candlestick pattern? Anyone know the bullish or bearish kicking pattern? It's a candlestick pattern. If you do, I don't have to explain it. If you don't, then I'll just spend a couple of moments talking about what that pattern means. Yes? All right. Excellent. Usually you only find the bullish and bearish kicking pattern on the daily charts, because it involves a gap. So most of the time, you don't have gaps on the intraday charts. It's possible, but not always. Doesn't happen very often. But okay, so if you don't know what it is, I'll quickly explain. So here's an example of a bearish kicking pattern. So basically, what it means is that you're trapping traders. Okay, so this is that's the psychology of the actual pattern. So here, going into Monday, the market comes up here and closes green. So here's a big outside day on Monday. Looks kind of ominous, right? Because outside bars for people mean, they mean us, people think that the buyers are in control or the sellers are in control, depending on the color of that outside bar. Again, the outside bar simply means, you're outside the previous bar's range. Now, here's a kicking pattern that's bearish. What the kicking pattern basically is you have the next bar actually gaps down outside of the previous bar's range. So this is the perfect kicking pattern. So basically, it opened here. That's below the low of this bar's range, or maybe just slightly below. The low here is 29.82. It opened at 29.81. Look at that. So that's perfect, right? So look at 82 is the low there. It opens at 81. So literally 1 penny below the low of this bar. Okay, so it opens up right there. And then for most of the day, it sells off. Now, what this basically means is that anyone who got long here or who was long in the sequence, they're trapped now, right? Because the market gapped against them significantly, right? So this day ended up being a minus 5.5% day. So imagine you're in this trade here, right? Everything is going great. You're long VIX, things are going higher. This thing closes, it's not closing on the highs, but you get that nice big bar and it's green. You're feeling pretty confident. All of a sudden, the next day, it gaps below the previous day's range. All right. So now when do you get out? Okay. So where's your stop going to be? Let's say you were hoping to put your stop below here. All right. Well, now gap below you, a gap below your stop. Now, do you just, use a market order and get out and risk the slippage? Or do you try to wait for a better fill? Maybe it comes back up and you try to get at, to exit gracefully. So here it did come up a bit. The sellers got, the buyers got lucky. They did come up a bit. Maybe you could have filled up here for a better exit before it collapsed and went down, 5.5%. So if you did not take that exit, if you're hoping for this thing to come back up again, it did not do that. And now it's gone outside bar and down, down, down. So this is the kicking pattern, these two bars. It's a 2-bar pattern. And what you're looking for is that on the bearish side, you're looking for buyers to get trapped. I'll show you a number of bullish ones that happened this week that were very nice. The mirror opposite, that where you see, a bunch of sellers got trapped in the exact same pattern. So these kicking patterns are great reversal signals, especially on the like I said, on the daily time frame, especially in conditions when we were hitting these lows. We had 5 consecutive weeks of selling. This week you saw a lot of those kicking patterns, and it's as simple as that, right? So here, outside bar and down, and now what do we see the VIX? It's momentum now. So as I always say, right, anytime you have an outside bar, that means buyers and sellers are getting more aggressive because they're taking out both sides of the range. So when the sellers win this battle, they're in control. So it goes outside bar and down. Now it's pure momentum. So down, down, down. None of these highs are getting taken out. So it shows you the strength of the momentum sellers. So the buyers are nowhere close to taking out these highs. So right now, there's no point trying to buy VIX, right? Like you're trying to catch a falling knife here because right now they are not able to take out these highs. So until it can take out the highs of one of these bars, so tomorrow it'll open up wherever it opens up, you need to see this high or whatever the next bar's high is get taken up before the momentum runs out. Right now, there's no point trying to catch that knife because it's going down. And you have the time frame alignment against you, right? So if you want to buy VIX, like why would you want to buy VIX right now? The monthly opens right here. It's red month. It's a red quarter. It's a red week, right? And if it opens up red on the day and you're down, why are you trying to pick up that falling knife, right? That's the general argument there. So there's your VIX pattern, and so they're crushing the VIX right now. It's going back into the range, right? It's going back down again, and so right now it's looking very, very good for the overall indices. Although again, it's one of those environments where unfortunately until we have more history, we're not going to get the benefit of hindsight until well after the fact, right? So in a month from now, 3 months from now, we're going to know more about the outcomes of these tariff talks, and about the Iran situation, and about the Brexit stuff and all that stuff. And we'll have more luxury around trying to figure out, well, why did the VIX do this and why did the SPY do that? But as traders, the whole game is that as traders, we're paid to speculate, right? And in speculation, you cannot have 100% certainty. So, right, this is the operating environment that we're always working in. We have to work in conditions of uncertainty, and that means taking bets where we don't have necessarily an understanding of all the facts. And so, my method is to use price to basically use price as I would subscribe to the belief that I'm simply following price, nothing more than that. I don't believe that price is deterministic necessarily. I don't think that because a certain pattern happens. If you watched my video, or if you were at last month's meetup, I talked about trading reversals, and I don't subscribe to the belief that things like head and shoulders patterns and inverse head and shoulders cause the markets to go down, right? So I don't believe that those patterns themselves cause the markets to go down. They're not deterministic in that way, right? So those patterns happen in certain scenarios, and those things are linked to bigger macro fundamental issues, bigger mass crowd psychological issues, scenarios that then cause price to go down or up. That being said, when there's a lot of herding, when you have a lot of people coming together and doing the same things, and we have herding and trend following, then price, I think, can actually be deterministic at that point. Because sometimes you see when you have manias or when you have crashes, you have buying that begets buying, and you have selling that begets selling. And so in those conditions, when things are really, being pushed by the herd, then I think at that point, then price can be deterministic. And then sometimes the causality is two ways, right? But most of the time, when we're talking about efficient markets, I don't think price is deterministic. That's just my opinion about that. So, I try to be clear about, I just don't think that chart patterns themselves have any predictive capability until you have certain environments where, there's a tipping point and there's just, the mass of people doing the same things, and they all see that head and shoulders, or they all see, that double bottom, whatever it is, then they all act in unison. And then price, becomes, then you can have that dual causality. Anyways, off of that topic for a second. So let's go. That's VIX right now. So VIX right now, again, we talked about the outside bar and down. That's the scenario, right? Full-time alignment to the downside. Now let's talk about SPY. Here's the cool thing about SPY. So SPY on the monthly chart pattern, outside bar and down. So we talked about it right last week in the video. This is what I said, right? So the outside bar is not significant in itself. So, it's people are all scared about the outside bar, like, oh my God, it's going to be an outside bar on the SPY. What's that going to mean? It doesn't mean much because unless there's follow through, it doesn't mean anything, right? So here you have the example where it goes outside bar and down, but if it doesn't follow through, it's going to come back up again. That's the issue with outside bars. So if you don't know it, outside bars are basically fractal broadening formations. That means on a lower time frame chart, it's a broadening formation. It's broader. It's a megaphone pattern in the sense, what a megaphone's like this. You see this megaphone here? That's a megaphone pattern, because what's megaphone? It has highs that are higher than previous highs, and it has lows that are lower than previous lows. That's a megaphone. So that there, this 1 month chart here, this outside bar is a broadening formation. So that's basically a megaphone in itself there. So the thing is that when you have price come back into a outside bar, basically this is in itself a smaller broadening formation, a smaller megaphone inside a bigger megaphone. So basically you have price now coming back up through this little megaphone. It's actually not that little because this is a monthly chart, but I think you get the idea. So now what you have happening here is that this is what you want to watch out for. It goes outside bar and down. Now, right now the buyer's in control. How far can they push it? So here's a nice thing with the SPY. If you're a bull, so the quarterly open is right there, 285.18. Today, the SPY got very close to going back to reclaiming its quarterly open. It got as high as 285.55 and it closed at 284.80. So nearly back above the quarterly open. So all that Armageddon talk, right? They basically they shut all that talk down by reclaiming the month, right? So the month started off here, gap down. As soon as this happened here, the buyers were in control, right? So the buyers are in control. So there's your kicker pattern on the daily and the SPY. Okay, so closes red. The next day opens up green above the previous day's range, trapping anyone who got short here. So anyone who did not cover on Monday, right? So the writing was on the wall here because Monday was actually quite a strong day. Even though it closed red, I don't know if you were watching the markets or not, but Monday was in the beginning it looked like the sellers were in control because it did gap down slightly. They took it down, but the buyers bought it back in the last 30 minutes of the day. So it looked like things were going to break down, but the last 30 minutes they bought it back, showed a lot of strength, and you'll see in the next few indices that they bought it back, and then that caused the gap up. They kept buying it for the past 3 days now. So SPY very, very close to reclaiming that quarterly open. On the weekly chart, here you go, inside bar reversal on the weekly. And this is what I've been talking about. Bigger reversals happen when you take out weekly levels. So I was saying, right, if you can take out the SPY or any of the indices highs, last week's highs, and it looked outlandish at the time, right? It's like, wow, how are you going to reclaim this bar's high? But they did it, right? They did it this week. So how are you going to reclaim that? And this is how you get 4 days of buying. That's how you do it. They reclaimed it, and now they took out that high inside bar reversal, and now they're going after that pivot there, 286.93 outside bar. Okay, so again, outside bars are very, very important bars to consider. But again, you need to see it in context. You want to see the next bar. Okay, so this in itself is bullish, right? Like looks bullish, but you need to see the next bar. What's going to happen the next subsequent bars? See this bar here, the outside bar? Let's start over here. Here's one that's that's right there. Outside bar and down. See the continuation? It goes down, 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 down. None of when I say down, I mean the highs are not getting violated. That means this is a momentum trade, right? It's momentum because the highs are not getting taken out in each week until it gets taken out there. Then it pops up, right? It pops up and it goes up here. Then look, outside bar, momentum back to the downside, momentum. Outside bars are a sign of momentum because one side is getting a lot more aggressive and winning the battle between the buyers and sellers. Outside bar down. This is back in December, right? So outside bar down, down. So here, that's not significant, but until that happens, then here, if they don't take out that high, it's going to get ugly, and it did, right? If you recall in December, it got ugly, got down 7.5% in 1 week there, and it got ugly, and then they bounced it at the end of December. It ran out of momentum, and look what happened there. Boom, right back to the upside again. So here now, what happens next week, right? That's going to be the question for the weekly market outlook video this coming weekend is what's the next bar and can it continue, right? Or do we do what we had in VIX here where, we had that monthly situation. What's it the VIX? Sorry, am I talking VIX? Yeah, sorry, this one here. Does it come back in, right? Does it come back up again against us? Okay, so let's keep moving. Qs. Same kind of story, but here's even, this is not a picture perfect kicking pattern, but nearly all the indices have variations of it. So once again, Qs actually ended really weak on Monday, the weakest out of all the indices because of the Facebook fiasco and the Google fiasco. Everyone, those two guys being investigated by the FTC and the SEC. SEC and who's the other one? SEC and I can't remember the other. It doesn't matter right now. So out, down bar, and then it gaps up, trapping these guys. Once it broke above this level here, that's the monthly open, weekly open. Boom, the buyers were in control. So buyers in control now. You want to see if you're short, if you're looking for shorts, don't get short early, because right now you have time. The time frame is working against you. Here's the quarterly open, right? So the Q certainly not looking like it's out of the woods yet, because the quarterly open's way up here, but the monthly opens down here and weekly opens down here. So I think the week is going to end up strong, right? So here's the week. Think about going in tomorrow. If you're going to trade tomorrow, if you're going to be short any of these key, any of these indices or stock, if it looks like this, how are you going to turn that week red if you're going to go short? Right? Like, is it really worth to go short? Like, how are you going to turn that week red? It's been a really strong week. So unless something monumental happens overnight here, that's possible. That's never beyond this, the scope of possibilities. I still think that the buyers, until one of these lows get taken out, the buyers are in control right now. So right now, on the Qs, on the monthly, outside bar and down, just like the SPY, right? But here we're coming back up. So right now we still have a lot of month left. So we want to see here where this next bar ends, right? So going into July, which is usually going to be, a lot quieter, are they going to try to do that slow, grind back up again? Or they somehow, let's just see how this bar ends up. But right now, again, where is it going to end up in this for the rest of the month? Okay, let's go a little faster now, because a lot of these charts are now going to look the same, because most of the indices look the same. Russell's a little bit different. You get the outside bar, but it's inside. So Russell never actually made a new low in June. So on Monday, they failed to make a new low. So it goes outside, inside, setting up a pretty interesting scenario here, right? So outside, inside. Again, how do you get out of this last month's range? So big bar last month in May. So how does Russell get outside of this bar? Okay, here, look, momentum to the downside on the Russell, right? Outside bar and down, 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 waiting for this high to get taken out. If Russell can take out that high, then it's coming back through the range again. This is inside bar right now, right? So still inside bar, inside week, I mean, and it's Friday tomorrow. So if Russell cannot take out this range, cannot break outside this previous week's range by, early afternoon, then, or by noon, then it's very likely that this is going to remain inside week. So that means, you don't, if you're trading intraday, don't kill yourself trying to, take long trades and looking for range or a bunch of direction. If it's trading inside week and it's Friday afternoon, it's probably going to rest and remain an inside week. But then that sets up something interesting for next week, right? Because if it ends as an inside week and it takes out this week's high, then you're going to have a nice catapult potentially to go back up to the range again, but still below the quarterly open. So that's what you got to watch out for. That quarterly open is still hanging over you right there. Okay. So here, great scenario here. And so this is what this is a really good example. So outside bar here on the daily and down. As I mentioned, on Monday, they failed to take out this high. This low. So they failed to take out that low. It actually, in this case here, on the Russell, it didn't even gap down. It actually gapped up slightly. It closed there on Friday and opened up slightly here. So it actually started off the month green right away. And it basically, it went down, but it did not take out the previous day's lows. So there's your outside and down. Once this high gets taken out, you're going back up again. And so I actually went long on the Russell on Monday afternoon. So at the close of Monday, because I understand this pattern, we saw this momentum fail here. Once the high gets taken out, there's the opportunity for it to come back through the range again. This is range trading, right? So you're coming back to the range because momentum is given away. It means momentum, the sellers have run out of control. And now, once the high gets taken out, which it did, it doesn't have to close above there. It simply has to break above there. Because once you understand broadening formations, right? So now you understand that this high is potentially in play. So that creates this mini megaphone. So if this high gets taken out, there's a very good chance now that this pivot will get taken out. So I took that trade. I bought calls on the Russell, it gaps up, and I covered. I could have rode it longer, to be honest. I could have held it longer, but I got out right at the gap fill. So I did not hold it to the end of the day here and gotten out here. That probably would have been a good idea. I could have probably trailed and kept the a piece and let it run. But I was content with that nice bounce there because we're still trading with time frame alignment to the downside with the quarterly. So happy to take that nice pop overnight and cover at the gap open and the gap fill. So easy trade there. But with the understanding, that this is a very high probability trade that it's going to take out that pivot. It's very, very high probability. And this pivot here is now in play right there. Because that's also an outside bar. And so if it does work out, then it's going to create that type of megaphone. So now you're just waiting, just watching price. You're just following price now and seeing how far it's going to take it. Now, Russell is one of the weakest indices right now, though. By far, it's the weakest of the indices. So you've had a lot more mojo in some of the other indices. But here's an interesting pattern. This is what I talked about in the weekly market outlook. Is last week, as I said, the markets are doing a really good job at tricking people, and that is they were luring people in and stopping them out. All right, they were doing a really good job at that. And so if you look at last week's action here, that starts right there. So it actually starts like a couple weeks back even two weeks in a row. You had a scenario where you're going inside bar and up, right? So the buyers were buying this. They're seeing this outside inside pattern. They bought it. Then the shorts created inside bar. And then once that low gets taken out, anyone who got long here, if it breaks below here, they're going to get stopped out. And that's what happened, right? So it pops up into these moving averages, but the price action shows you. So, there's moving averages here, but the price action showing you exactly what's happening. It goes inside bar and up. If you bought this, right, you're going to put your stop there, or there. So you buy that, it goes inside bar. That's the worst thing that could happen for you right now, because once that low gets taken out, they're going after that pivot, and that pivot. And that's what happens. So you got trapped, or not trapped, but you got lured into a bad trade because you're going against the major time frames. Likewise here, it goes inside bar up, exact same pattern. Inside bar up, inside bar, they counter it, and then gaps down against you here. Same thing last week. Inside bar up, then they trap, they stop them out down here. Inside bar up, and then takes out that low and takes them all out here. This week, as I said in the video, are they going to do the same thing again? And they could not this week. So look, inside bar up, inside bar, but this time they did not break to the downside. And so that's what I was watching for. I was like, are they going to do the same plays they've been doing for the past 2 weeks now? Can the sellers, continue to lure the buyers in and then sell them in the afternoon? On Monday, they couldn't do it. The best they could do is muster an inside bar, right? And then on Tuesday, we know what happens now. It pops up, and this time around, the buyers are sticking it to them. So we'll see what happens. Right now, outside, inside, it broke to the downside here, right? There's our inside bar. So they tried to bring it back down, but they couldn't. Inside bar to end today. Now, guess what happens? Tomorrow, if it goes up, that's an inside bar reversal to the upside. So then it would be the opposite of what's happening here. See this here? That's a mirror opposite. See these? That's a mirror opposite there. All right. So that's gonna be interesting tomorrow. So we want to wait and see if it takes out, takes out this high. This is the 4-hour chart. We take out that high, then we're gonna go after that pivot, and that pivot, and we'll see where it goes from there. But again, these two are basically the mirror opposites. All right. So let's talk about the Dow, and then we'll go on to a few other interesting things. Actually, before I go on, any questions, guys? I've been chatting for a while here and kind of on my soapbox, but and I know we had that one question around Beyond Meat. So obviously they did beat, so they had some good returns or good after hours gains. Okay, I'll let you guys think of any questions you may have. Let's keep rolling here. So let's go a little faster now. So now the Dow, Tesla, sure, for sure. All right. So the Dow, inside bar, down and back up. So inside bar reversal. It is an outside bar, right? So you got to watch out for that. Momentum now. So that means this is, it's a pro and con. Momentum means it just has to keep going. If it can keep going, it can go a long way. But if the buyers can't keep control, then it's gonna flip over, right? And then you're gonna lose that momentum, and it can possibly turn over again. So this is one of those situations now where it's great to have these outside bars, but you got to watch out, because once they fail, then there's the possibility that they roll over, and you see that happening time and time and time again. Once you get used to spotting outside bars, you see how they trade. You just get used to interacting with them. So that's what we're looking at on the weekly. So inside bar reversal. Now they're going after that bar's pivot, still below the quarterly open. But right now, buyers in control, right? Buyers are certainly in control here. Look at that pattern there. Dow, this is a nice one. So there. They reclaimed. So, today in the chat room, I was actually long Dow calls. And this is the opportunity for them to take out that high there, because that's an outside bar. And that creates the broadening formation. I can go a lot higher, but I'm happy with that call because, well, I'm happy with that trade because I know that's a high probability place for it to take out. That's going to create that broadening formation going this way. It can get bigger, right? Megaphones can grow, but this is this is the beauty of that trade, because it's once you see it happening in the Russell, then there's a high probability that's going to happen across various indices. And now you're looking for ones that have the most strength. The Russell is the weakest one, so that was the one that I elected to take quick profits. The Dow, I was letting more willing to let it run because it's been stronger than the Russell. Okay, so there's your there's your outside bar. High was 257.21, and that takes it out there. So now we have 258.35. So nice move there on the Dow. Okay. So let's do one more chart, and then let's talk about some of the other names here. So TLT, man, this thing's been a beast, and I think it's there's a few notable lessons here. And number one is, I think today I just saw this evening I saw an article on Bloomberg that said that Gunlatch, he's a big, if you don't know who he is, he's one of the biggest bond managers in the world, and he had been advocating last month on doing a strangle. Was it a strangle or a straddle? I can't remember. It was probably a strangle on TLT, because what do we have? A strangle right there, right? So he did it right. So not last month, but he did. He said it back in April. We had that inside bar, outside inside. He called for the strangle. It was going to break one way or the other. That was his call, right? I think he was aiming more to the upside, and that's what we got. So this back in June, or in May, we had that huge move on TLT. So just simply buying that outside inside on the monthly, that came out to be like a 2.5 hour trade on the monthly chart for bonds. So that just for strangles, I think he has said that you'd be up about 20% right now on that strangle, which is not bad for for bonds. So he was saying if you got into that trade, you probably want to exit now, because that's if you read the article, he said people who bought that, who are buying TLT, are probably going to have buyer's remorse about now. And so that's what we see here now, right? So if you remember the weekly market outlook, as I stated in the weekend video, this is the outside bar right there, and so it's outside bar and up. All right, and now you're going above the Bollinger Band. So here you're doing the Bollinger Band walk, right? So you're doing the Bollinger Band walk. It has to keep going. If it doesn't keep going, look, outside bar up, momentum. That's all momentum. Once momentum fails, right there, once that fails, it's going to go down. So now the question is how far it's go down, because now you're below the monthly and the weekly open. The quarterly is way down here, but again, momentum is predicated on there being more buyers than sellers. Now, did they exhaust themselves? Right. So look at the volume there. Did they exhaust themselves on this move up? And here's the issue, right? When you're chasing momentum like this, sometimes you're not going to get a good exit. So here, it goes outside bar and up, and don't forget it's there's your broadening formation once again, right, ladies and gentlemen. So there it is. As I said on the weekly market video, you hit the top of that broadening formation. It has to keep going. If it doesn't keep going, stay above the resistance, it's going to come back through the range again. How far back, we don't know. So now you just have to watch price, but it's pulling back now. But like I said, when you chase some momentum like that, you're sometimes not going to get a good exit. because here it gaps down against you, right? So let's say you go into, May. Here's the final day of May. You go into June. You're like, hey, I'm still pretty good. I'm up 0.5% for June the 3rd. That's pretty good. It gaps against you, minus, it gaps down, and then it ends up closing the day minus a percentage, 1.14%, right? And it keeps going against you. Today it bounced up a little bit, but how do you get out gracefully, right? And that's always a challenge with momentum trading, is that, especially swing or overnights, is that they can gap against you. So just be wary of that and the condition you're in. And that's why understanding the time frame stuff is so important, because once this happens, you have a new month, you do not want to see this thing break below, because it's going to come back in. Okay, so there's TLT. Let's do a couple of stocks here that you guys have talked about, and then I have a couple of stocks that I want to share. So let's first do Beyond Meat, because that's a fun one. So Beyond, I think, Terrence, today you were asking about if we could short Beyond Meat, right? So what did Beyond Meat end up closing at? Yeah, so my TradingView charts don't show the aftermarket data, but it looks like it closed at 117.49. So just to put that in perspective, I'll draw that. So tomorrow, let's just pretend it opens up where it closes. 117.49 is here. Oops. 117.49. Yeah, exactly. NVIDIA, sure, Gabriel. So 117.49, right? So there you go. So it's a nice little gap, right? So it's going to turn everything green. So what do we know about? So all I can say right now is, what do we know about BYND? What do we know about Beyond Meat, just in terms of the price action? There's not a lot of bars here because it's such a new issue. So obviously the quarter's green. So you're trading green quarter right now, right? So anyone looking at that 3-month chart, looks like a pretty good chart right now. So for the rest of the quarter, it's going to be hard pressed to turn this thing red. Very hard pressed. Beyond ludicrous. Yeah, I know. I'm with you on that one. I don't quite understand the story there, but they do have the first movers advantage. So right now, kudos to those guys. Let them milk it. I think subsequent quarters. You have to put on extended hours. Let's see if we have the extended hours here. All right. Let's see if I have my extended hours. Am I in the right place here? Chart settings. Extended hours. Yeah, it says intraday date only. Let's see if I can do it over here. On, let's say, the 4-hour chart. Okay, let's try that again. All right, so there it is. There it is on the intraday data. So it doesn't get applied on the Okay, so I did the same thing. So I'm going to turn off some of these ugly shadings because that's kind of hurting my eyes. So let's turn off. I don't really like that. There we go. Okay, so that helps us a bit on the intraday data. Okay, so all we can say right now, green quarter, right? Red month, but after the earnings, it's going to be a green month. It's going to be way up here. Okay, so you're going to have a green month. It's going to be a green week. Here, what we had happen on the daily was outside, inside. So here's the situation: inside, outside. Just have a sip of water here. Okay, so inside, outside. Here's the thing, right? So if you short this, so had you gone short here, if you could short, I don't know anyone who could short, but if you could short this, you have to watch out, because as soon as this bar happens, you've lost control. So as a seller, let's say you're looking for this thing to reverse. Okay, so you're like, okay, inside bar, it pops up, comes back down, takes out that range. You're like, great. Okay, so now this bar here ends the day red. Okay, so you're happy because you're short. You got short on the break of that low and ends the day red. This next day is terrible. Okay, so terrible in the sense that now it's a stalemate. So you had control and now you lost control because now it's a stalemate. This bar here is a red flag because now you broke the high of this inside bar. Now this is tricky because, you know, today they did break below that low. So they're coming back. But if you look at what's actually happening here, I'll zoom in. Excuse me. You're trading inside this mother bar. So these are all inside bars. Okay, so even though they're not inside that previous bar's range, they're all inside of this bar's range. So this is all considered inside bar action until you get outside of this range. So earnings happens, and you know it is what it is, right? So you can't control earnings, and the price only tells you so much sometimes. This pulls back in, and then it gaps up, and you know, we know the story now. So nothing much more to be said about BYND other than that it's going to be green quarter, green month, green week, green day tomorrow morning. And then right now, you know, look at it, it's outside bar and down, outside bar inside bar down, outside bar up. And that's going to, you know, we'll see what happens tomorrow. So right now, no shorting opportunities for BYND. It's if you do short, I just recognize you're going against all the major time frames right now. So I'm not saying don't short tomorrow, but I'm just saying from a longer term and all the bigger time frames, they don't support a short position right now. So wait for another time frame, maybe next week to show up if you really want to short BYND. But right now, the easier trend is up. Okay, so good question on BYND. Let's talk about Tesla. That's another good one. Tesla, all right. I'm going to turn off this. I actually don't like looking at the after hours data on TradingView. Okay, so let's turn off this trading. There we go. All right, so I actually went Tesla. I actually went long Tesla. On was it Monday or Tuesday? I got long Tesla. I think it was on Tuesday, but I'm out now, so I already covered today. So Tesla. Yeah, okay, so what do we say about Tesla? So on the bigger time frame, let's take a look. Inside bar and down. I actually had been short Tesla for a while. I actually I was short in here, you know, all the way down here. I actually covered around here. Missed that pop down on Monday. So, you know, which is probably a good thing because that allowed me the flexibility of actually going long Tesla. Sometimes when you know, as you guys probably know, when you actually short something, it's really hard to flip, right? Because you have a bias because you're currently short. So I was actually fortunate, you know, because the new month was rolling over. I didn't feel comfortable keeping the short on. And yes, I could have made more money to the downside there, but then I probably wouldn't, you know, knowing myself, I may not have had the actual mental flexibility to cover it and then to go long. So I was actually short going into June, flat going into June. And so that allowed me to look for that opportunity to get back into Tesla to go long for that quick pop. Because I know how short a Tesla is. I you know, if you look at the Twitter sphere and you look at StockTwits, you know, there's a whole there's basically a whole cabal of shorts out there who want to take down Elon and Tesla. So if you just look at the stats, you know, 21% short interest rate. So, you know, this is a short covering, you know, it's just pure short covering at this point. So Tesla, back to the charts. Inside quarter, and down. On the monthly, that's momentum, right? Trading went to the downside. Weekly, here you go. There's your outside bar. So now this is what you don't want as a seller. You had a bunch of good weeks going for you, right? A number of good weeks. Here's a good shorting opportunity right here. Outside bar and up. Insides, right? So the buyers had bought it up. Then you're watching for these lows to get taken out. Inside bar, so that means the buyers and sellers have reached a stalemate. Once that low got taken out, bam, that's a short. So it breaks down. Inside bar, right? Cracks up. Inside bar reversal right there. Breaks back down. And now this is like a red dog reversal. So grab comes down, comes back up to the range again, coming back up through. So at this point here, Tesla, you're still trading way below the quarterly open. But as we saw with all the indices, right now the buyer's in control because you can see the bar by bar high lows are higher and higher. So there's no point disputing that until one of these lower bars get taken out. So unfortunately, if you're short here, you're going to get squeezed a bit. But right now, I'm happy to be flat. It can go a lot higher. I just don't want to carry it over the weekend. So I was happy taking it off around that 20 period moving average, and so that's how I like to trade it. But yeah, Tesla for the time being, looking like things are in the favor of the buyers. Okay, so let's talk about the next chart. I want to share a few really fast ones, and then Mary's had a question about Nat Gas. Nat Gas, all right, Nat Gas, the Widowmaker. Okay, so let's do a few really quick ones before I lose my voice. Okay, so let's talk about Spot. I call this one out as a potential interesting one here because look at Spot. Inside bar reversal potentially now on the monthly. So inside bar went down, right, in May. Inside bar here now. So if it takes out that high, it turns into an inside bar. Or if it just remains inside month, then next month it cracks that high. We're going inside bar reversal back to the upside again. Spot. Okay, at this, there's your outside bar, inside bar, outside bar, and coming back through the range. That guy looks like a really sexy target pivot to go after if it can crack some of these levels. So let's talk about AMTD. So AMTD on the weekly here, outside and down. We talked about that pattern, right? Outside and down. Here's the problem, right? Once you lose momentum, guess what happens? It comes back to the range. So as soon as this is a good, I like this trade a lot. It's something that I think it pays paying attention to. So here you have an outside bar and down. It cracks below this low. All right. Now, once it breaks below that low, as soon as it comes back through the range again, there's the potential for it to come through the other side. The potential. Doesn't mean it's going to come through, but there's the potential. So as soon as this thing cracks back into here, you might want to go long. I'm just saying. You might want to go long because this can happen. Because you know that there are broadening formations. That's a broadening formation, right? The outside bar. And if this was back through the range again, it's going to come out through the other end. You know it's going to come out through the other end. So that's what's happening there at TD right now. That pivot looking really nice. And you have full time frame alignment to the upside, right? Back above month, week, and above the quarter. So financials had gotten beaten up for a while there. And now they're coming back up. So look at, here's another nice one. JP Morgan. Okay, so same sort of situation here on JP Morgan. So here, you don't have an outside bar, but it's exact same information now. So reclaims the weekly open, and then boom, taking out that high and going after that pivot high there. Same thing on the daily, outside bar and down. Once that high gets taken out, right, they're going back up to the range again. That's what they're going after. They're going after that pivot high now. Okay, let's do a couple more. Oh, hey, look at JPM here. It's right there on Monday. Outside, inside on the 4-hour chart, and then bam. Beautiful continuation here. So these guys they're buying them back. They're buying back the banks. TTD, this one's kind of hard to trade, but like intraday because it's a big spread. Man, swing trading this thing is nice because this thing can move. Going back to look at that chart, all-time highs. TTD, all-time highs. And so TTD, look at the kicker pattern. Okay, so bullish kicking pattern, not a perfect one, just because this open here did not open above the prior day's high, but very, very convincing. Forget that this is a big green bar. That's nice that there's a really big green bar there. But what's nice about this pattern is if you look at that by itself. So here's the situation, right? So you have inside bar and down in May. The final day of May, the sellers are in control. Inside bar down, like great. I'm in control, right? Like, look, it broke down. Look at there. That's the weekly open. They could not break below the weekly open. In fact, this thing bottomed back in the beginning of May. You see it? So look at so these purple lines are the weekly opens. It actually bottomed back in the week of May. Look, inside bar and down, right? Back on the 13th. The 14th, it broke above there. So inside bar reversal, back up again. And then for the 2 weeks after that, it cannot break below the weekly open. So the buyer's in control. Here, they really jammed the sellers. So the 3rd of June, the first day of the month, they close it red. This is the first time, right? They actually close it below the weekly open. All right, so there you go. You're below the weekly open. First time since May the 10th. Bam. Right? So once this thing here gaps up, you know this is an outside bar too. This is what makes it significant. It's not a perfect kicker pattern, a bullish kicking pattern, but because it's an outside bar, you know these guys are getting trapped because the sellers got really aggressive. Okay, so they got really aggressive here to try to break it below, and then the next day it gaps up. And so these guys who got really aggressive are now trapped. And it never comes back down here. This is what really gets them. It never comes back down here, and this thing rockets. So this thing had a 13% day on Tuesday. If you know TTD, if you ever traded it, you know the spreads are wide. So that means you just can't press market to get out. So these guys are getting jammed. Like they got really, really jammed. And so this, once you're in here, you look at this TTD trade, right? You know they're going after that pivot high, right? So it goes to all-time highs. You know they're going to take it out. So here on the 30-minute chart, you do something as simple as this. So the day was here, the 4th of June. Let's go to the 4th of June. There, right? So zoom in. There's your 4th of June. Simple opening range break. You're in there. Break the 30-minute high. Of course, you can go to a lower time frame and try to get some better execution. But this thing does not give up. It's just rocketing. So TTD, great. That thing is great trading action. Keep that on your list. Hard to trade intraday. I don't recommend trading anything intraday, but certainly the story and the fundamentals around that stock are really, really good. Okay, one more, and then I'll take some more of the questions. So AMD, yeah, Terrence, I was going to talk about that one anyway. So yeah, good call. AMD, yeah, this is one of my favorite ones to trade. It's got a really good story too, because AMD, I've been calling this one for a while now. This is the poster child from momentum trading, right? So anyone who trades momentum probably has AMD in their watch list. And so AMD, as I've been saying, is inside month, and then it had gone inside month and these are quarters. It had gone inside quarter and up, right? But it came back down. It actually, had broken above 2811, but had broken back below there. It actually came back down. And so for a while there, it looked really iffy for AMD because look, it was, what do we know here, right? Inside bar, outside bar, and then it goes up. So here's momentum. Inside bar and up. Outside bar and up. Outside bar and up. That's momentum. And here, had these sellers been able to take out that low, 25.83, we could have seen this thing come down here, come back to the range. But they didn't, right? Look, they supported and they held that quarterly open. And they ended the month as an inside bar. So even after all of May's mayhem, they could not make this thing, break below April's lows. So they closed it as an inside bar. So the momentum's still there because look, all the lows are still higher. So this thing finally goes inside month and up. And today they catch an upgrade, right? So today, up another 8%. But really nice trading with AMD there. So that's the strength on the monthly chart. On the weekly chart, same thing, same sort of action. You can see outside bar and down, right? As soon as they take out that high, they're going back up. But here's the issue. Here's the fun thing with AMD. Here's what's tricky. So AMD here goes outside bar inside. Okay, so that's Monday. Kind of not ugly, right? You don't expect to see a big red bar like that for AMD that's kind of a red bearish engulfing bar, right? Because it's red. But then they counter it with an inside bar, outside inside. 7% day on Tuesday, it's still an inside bar. It just shows you how big this range was on Monday. It was a massive range. Inside bar, Then yesterday was kind of weird because it was kind of like it fizzled out. He had the inside outside, outside inside, I mean, and nothing really happened yesterday, which is kind of puzzling. All of a sudden today, it took off. So how you just traded the dailies, this day faked you out. It was ended up being a second day play. But if you looked at something at a lower time frame, this is what you saw. Well, let's just do the higher time frame first. Let's do like a 2-day. It was this action here. So you saw that it was inside, outside, and it went up. So it's momentum. You can see right away, momentum is back in play for AMD because it got the outside bar. If this bar gets taken out, which it did, it's not momentum to the upside. Today, it kept on going. But the 4-hour chart told the story right there. Yesterday, remember that daily chart? We said, oh, that's kind of, that's kind of a, sorry, I jumped out. That's kind of a non-event day yesterday. That wasn't a non-event day. It wasn't in the sense that nothing happened, but it set up today's action. Because look, this is a red day. Looks uneventful on the daily chart. But you look at the 4-hour chart, and it creates that. Outside, inside, right? Beautiful. Outside, inside, and then breaks to the upside. That takes up that pivot, and now they're going right back into, and you have to go back. They're going to go after some of these ranges here now. So really, really nice trading with AMD. There were some really good opportunities today, intraday trading it. I know I picked it up a number of times today. Didn't quite catch the high. That's never quite the point, but it's always fun to try to catch the high. But I actually not bad. I called 31.78 for the target. 82 was the close. So yeah, no, it's not so bad. Anyways, so let's take a few more questions here now. Marius, Nat Gas has been beaten down. Yeah, UNG. So UNG is a tough one in the sense that it's a hard product to trade. I don't know of many successful traders who trade Nat Gas consistently. You can make monies in certain spots, but you want to certainly be looking at Nat Gas opportunistically. Not one of those things where you want to be trading it actively, because over time, I don't know many traders who can successfully trade Nat Gas consistently. It's a very tricky market because it's pretty much run by institutions. So it's very hard to trade against those guys, especially the UNG contract or these these UGAS contracts. They're not like trading futures, so you're gonna miss all the overnight stuff, right? Like you're missing the 24-hour market, and so that leaves you with gaps. And so this is the kind of stuff that will kill you if you put on a trade and it gaps against you, right? Then there goes all your risk management, because it gets gaps against you and you're gonna get screwed. So, anyways, even in the futures markets, I'm not saying it's any easier, because like I said, the institutions will run the futures markets for Nat Gas, and most retail traders just don't have the margin required to take the type of stops that are necessary to trade the volatility of Nat Gas. But let's just talk about the chart. Forget about the actual instrument for a second. Let's just look at what the charts are telling us. So this is how I would do the analysis. Okay, so 3-month chart, red quarter right now, really red. Month, red month, and this is like the 1, 2, 3, 5th month in a row that's red. Until one of these highs get taken out, it's not looking good for Nat Gas. Obviously, Nat Gas number came out today, and things are selling off still. Look at the weekly. Weekly right now, sellers in control, right? Outside bar and down, full time from alignment to the downside. There's your quarterly open. There's your monthly open. Outside bar, down, down, down. So here's the reversal, right? Outside bar up. There was the buyers in control here. But once this low got taken out, so when it came back through the range, as soon as that low gets taken out, that's a great short, because that puts you back in a full time from alignment to the downside, right? Because that breaks you below the monthly open. That's you're going to be red on the week, obviously, and then it's going to that curtails this kind of selling. Daily inside bar down yesterday. Okay, and the 2-day momentum. This is momentum right now. Outside bar and down, down, down. Just watch out, because as soon as one of these highs get taken out, because right now you're doing the Bollinger Band walk, right? So this is fun trading if you're in it, right? So right now, if you're short this thing, then you can be shorted. But just again, like we saw in TLT, don't be surprised that when it starts losing momentum, that it gaps up against you, and that breaks the trend to the downside. That's the nature of momentum trading, right? You just has to keep luring buyers in or sellers in this case, and take the trade, but you just got to monitor for a continuation. Keep watching to see if this trend continues, because who knows how far it can go, right? Like, look at that. It's UNG is not a great contract because you have that whole backwardation thing or a decay thing. So maybe it's not a good chart because it's always going to go to lows. But right now, yeah, UNG is back to doing what it does best. That is to go to zero before they split it again. All right. So VTL, what's up, man? Get to see you. So first question, can you take a look at GBPCHF? All right, let's do that. I don't do a lot of forex, as you know, but let's see what we have here. So I'm gonna grab the FXCM chart. Yeah, I like the British pound because it's been more volatile. Ah, look at those nice trends on that, huh? Man, look at that trend there since May. Wow, nice. I haven't looked at this pair in a long time, but that's nice. So okay, so what are we looking at here? So on 3-month chart, even after all this calamity, right? Outside, inside on the quarter. So we had a massive quarter in Q1, so still trading inside of Q1. So even though that's pretty spectacular, still recognize trading inside. That means what you need to know is that we only have a couple months left for one more month left. Well, not even a full month to the end of the month for the quarter to end. So you just know that at some point, if it remains inside quarter, excuse me, you're gonna expect some chop. So expect some chop if this thing doesn't get outside of this range. Okay, outside bar down. So that's nice because now you have clear edges, meaning outside bar. So if you're short here because you broke below that, like you shouldn't be long here by any stretch of the imagination. If you're following price, the price is not telling you to go long at this point. The short would be below there because it goes quarterly open and down, right below that. Now you don't want to see this high get taken out if you're on the short side. Weekly, yeah, just down, 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 down. That's just continue to watch to see if you're short. If you don't want to see a high get taken out, otherwise that could create a trend change because you're doing the Bollinger Band walk, right? You're in the Bollinger Bands now, and you're successful at walking down it. It just means you have to keep walking down it. Can't pop up. Can't pop up. Okay, and this one here, outside bar and up. Yeah, possibly if you break below here, it can go down further. You're getting stretched here now, so now that's the pivot they're gonna try to go after, right? So that's a pivot. That's a decent pivot there. That one right there. That's a decent pivot. So if you were short this thing, that's kind of where I'd be aiming for it. So inside, outside up, this thing breaks to the downside. Play it to the downside, right? 2-day chart not telling you much other than that it's going down aggressively. Outside bar and down, down, down. But now it's getting kind of tight. It's getting tight. So you had that really big expansion move. Now things are kind of slowing down a bit. So here's where you got to watch out. Friday, last trading day of the week. So yeah, you gotta pay attention because this week has not moved much. Because look, there's your monthly open, weekly open, and you're still hovering right around there. So it hasn't really moved that much this week. Let's do another one, and then we'll do let's go to gold, and then we'll go back to a forex pair. Gold is funny because I don't, the gold bugs love to take any moves as being significant. Because let's see, gold's moved from, let's say, May to the high of June. It's moved like 6%, right? So that's like a 2-month move of 6%. Sorry, that's just not significant. It's just not. It's just I don't know why gold bugs are so enamored with the moves in gold, but it just hasn't gone anywhere. Especially if you compare that with bonds. Like bonds are, even then bonds nothing to. I'm not, comparing bonds and gold, man. Look, bonds are up, same thing in 1 month, 6%, right? It took gold 2 months to do that. So yeah, gold here's a problem with gold for me. Well, you know what I've been saying in the videos. It's stuck in a range. So let's blow out that. It's still inside year. So we're still trading inside of 2016's range. So all the stuff is mother bar. This is all inside the mother bar of 2016. So until this can break out, yeah, I'm not getting too excited yet. So yeah, at a certain point, that's time to get excited. But there's gonna be a lot of time to jump on this bandwagon, because once this high gets taken out, then it's gonna get interesting. Until then, yeah, the moves are not that significant. Yes, you could probably trade, something with leverage, or maybe use like a nugget or something like that. With bonds coming in, I'm actually more. Sorry, go back to gold for a second. Like I think it's a shorting opportunity. Well, potentially, I didn't take the short because, there's not enough beta for me. I don't want to waste my capital, my margin, shorting stuff, or wasting it on things that only move 6%. But here you go. Inside, outside, inside, and up. Momentum move, right? Goes inside bar, up. That low gets taken out there. Potential inside bar reversal. So that's what happens here. So today, we did break below that level. So if sellers tomorrow can step it back in, we can come back down through the range again. Especially since we see bonds coming back in now again, right? So things are kind of calming down a bit geopolitically. So maybe gold takes a little bit of pause. This goes back to what it's doing, and that is nothing. All right, so this is GLD. Any other questions? Let's see here. What have you guys been looking at? What have you guys where have you been finding success? What kind of stocks or what kind of plays have you guys been doing to get some good success in June? It's been 1 month into June. Are you guys sticking intraday? Are you guys back into your swings? What are you guys doing? Yeah, so just looking at your question again, Marius. Rebound candidate for Nat Gas. My answer is I would try not to pick bottoms on this thing until you see the momentum disappear, right? So right now it's momentum to the downside. So until you have at least this high get taken out, okay, so 2090, you do not want to be getting long this thing because momentum right now is to the downside, right? The momentum is all to the downside. So don't try to bottom pick UNG because right now you're trading against all the major time frames. Quarterly open, monthly, weekly are all down. So until you at least see this weekly open get taken out high, then and time frame begin to work in your favor, then look for the potential longs, or look for the reversal pattern on the daily chart, like we saw in the indices, like a kicker pattern, right? So if you see some sort of a bullish kicking formation where it closes low here like this, let's say tomorrow it opens up and it gaps and traps all these guys there, then maybe you have a good a tight defined stop there for an attempted reversal, right? Maybe gets you back up again. But until, and then maybe that takes out last week's highs, and that could, then you might be able to catch the bottom there. Or don't try to catch the bottom and just wait for things to, to bounce up and then ride the trend. You don't always have to catch bottoms, right? Catching bottoms is tough because most of the time it's going to take more than one attempt to catch that bottom. So if you're going to try to catch bottoms, give yourself at least 2 tries, right? So allocate your capital so that, you're not blowing yourself up on one single trade. Recognize that you're probably not going to catch the first attempt, and that is a 50-50 chance that you're going to catch the bottom, right? So give yourself 2 shots, and if you fail on both, then you were on the wrong side of the trend, and that's a lesson learned. If maybe whatever pattern you're using to try to catch that reversal isn't the right pattern, or you have the wrong timing because the timing is wrong as it pertains to time frame. Okay. So I think, Claude, do you mostly trade expensive stocks with options? It depends. Not always. Not always. It depends on a number of things. But like for instance, Tesla, I was long stock on Tesla. I did not use options. So for me, the options they have to. Like sometimes the options are decent because if you're trading a stock with a high price stock with a big spread, then Um, yeah, it's dangerous trading that stock, right? So you might want to use the options. Challenging part there is that if the stock has a big spread, then probably the options have a big spread too, right? So you're not much better off there because you're going to have slippage on that. Yeah, exactly, on that instrument as well. So with Tesla, I elected to go stock, but most of the time I will use um, options, especially for overnight stuff. Most of the time, Tesla I was okay with because I just had that conviction that things are so there's so much short interest that that I think it was a decent trade. But yeah, how far up do I buy my options? It depends on what I'm trying to do. So if I'm trading intraday with options, then I'm looking for, like, if I trade the SPY, obviously SPY has stuff that expires the next day, 3 days, 7 days, bi-weekly, the rest of the expiries. Um, yeah, on SPY, I'll do one day if it's a very low time frame chart. So if I take a trade on the 5 minute chart and I really think that I have an edge, then I'll use the 1 day expiration. But usually, yeah, if I'm doing like a higher time frame chart, like a 30-minute chart, then I want to go for a 3 day, just because I don't like that. It could be a multi-hour hold, and then you just don't like seeing that the decay. So yeah, 3 day can't really go wrong if you're right on the direction and you're holding a 3 day, and you're trading a 30-minute signal, you're gonna make money. So yeah, how far? Yeah, so 1 2 months, and then for yeah, I think it all depends on your time scale, right? On your time frame. So you just got to factor into that. And the way I factor into that, it's by looking at my targets, right? So if I'm looking at a target that's on the daily time frame, then that I'm probably going to go with something that's within within the month. But if I'm looking at like a wider time scale, then yeah, then I'm not going to be using something that's within the month. It's probably going to be a multi-month option. Do you mostly use outright options, or do you use other option strategies? I mostly go outright. I usually just go long options. I don't try to mess with spreads, because I'm mostly directional. Like, I trade mostly directionally, and I just don't want the headache of trying to manage call spreads and put spreads. Yeah, I want the flexibility of just getting out fast and not worrying about how I'm going to handle one side of the trade or the other side of that trade. So if but obviously we all have different styles. So I trade frequently, so I don't mind that type of trading. Now, if you don't want to trade as often and you want to be more like a sniper, and you're picking, and you're really, really zoning in on that setup, and you're just going to keep a really small basket of of um of of setups and positions, then you can manage them a lot more closely, right? And then you're gonna, and then you can manage your options and create more complex strategies, and adjusting your legs and that kind of stuff. But for me, I don't want the headaches, because I remember when I first started trading, this is 12, 13 years ago now. I started off with options, and I made some good money, but I also lost some good money as well. But I found the hardest thing with options was getting out. Getting in was so easy, like getting into a trade was super super easy. The hard part was getting out, especially when the trade doesn't work for you. Then, like, how do you get out of that trade? So, one side's going to be easy to get out, the other side's going to be messy. And then what do? Like, you try to fix it, you try to repair it. Then it's like, and all of a sudden you have all these orphan legs on. I'm like, oh my god, it's like it was just too much stuff for me, and I was creating really complex trades that, frankly, given my level of experience, I had no business doing. I had no business creating. I was doing stuff like iron condors and on instruments like the OEX and all that kind of stuff that you hear about on back in the day, back in 13 years ago. They didn't really have tasty trade and that kind of stuff yet. They weren't that popular, but nevertheless, people are still doing those types of trades and talking about doing trades on those types of indices. And yeah, I had no business doing those when I first started out. So yeah. Okay, so a lot of good questions coming in. Was it hard for you to make a U-turn? Yes, it was hard to, some parts, yes. So this is why I try to get, I think, Terrence, that's a good question because I know you try to get fairly flat from what I saw in your post on Slack going into June, and I knew the risk, right? So I knew the risk of holding shorts going into June, but I wanted it to give the opportunity to work out. That's always the trade off, right? So that's the trade off, like knowing what we know about time frame alignment, and I'm saying it like I know that on Monday that the buyers have a chance of taking control. So what do you like to do, right? If you're short, and I was net short, I had longs and I had shorts. What do you do? And so I elected to go in to Monday being net short. So I had a bunch of swings on still, net short. I had some longs, and Monday was actually wasn't that Monday was actually Monday was not a fun day. Not because my shorts hurt me. It's funny things because the shorts didn't hurt me that much because we had that dip down and I saw it coming back up again, so I was managing it because I knew what was happening. The hard part was that I had actually entered in more short orders in on Monday, and I was getting filled on those because on the dip down, it dipped down in the morning, and so I was getting triggered on more shorts. And so those shorts were quickly underwater as things, in the last 30 minutes of the day, as things popped up. So that's the part that irked me because I'm like, oh, the markets did do a really good job at luring people in, and I had my level set already. So unfortunately, I wasn't taking discretionarily. I had my levels, hit those levels, so those orders got triggered, and so I was getting short more things. Unfortunately, the last 30 minutes of the day, things started coming back up, and those shorts quickly got underwater. And so I had to, make some decisions there. But we talk about it every single month at the monthly meetup. It's like one of the most important traits is the ability to be cognitively flexible. And so some say that it sounds like you're being wishy-washy, but on Tuesday I recognized right away that man, I can't be, a lot of these shorts I got to cut right away because this is not the right environment to be in those shorts. And certainly I gapped up, and right away I'm like, okay, cut them off because you don't want to be holding on to those crappy shorts at this point. It's not the right market anymore. So, that's the name of the game, right? Like if you trend follow, then unfortunately the trend is your friend into the end, right? And that's the unfortunate part. But that is also a very, very important lesson. This is why I think it's a really good question you brought up. That sometimes you just have to get stopped out. There's nothing wrong with it either. There's nothing wrong with getting stopped out. It's just the nature of it. That's the market's way of clearing your bad positions. So hopefully we're using the right position sizing, right? We're allocating our capital properly so that if we get stopped out, it's not going to kill us. This is why it's important not to oversize our positions and that kind of stuff, so that we don't get so that we're not so biased with our book. So yeah, did it feel good to get stuck all those trades on? Unfortunately, I got filled on those trades on Monday, right? So that's the crappy part, is that I got short more stuff on Monday. That's the part that bothered me. Wasn't that I got in short on and at the end of May. It's like I got filled more short on Monday, and I knew right away when I short, I'm like, man, this is not good. But yeah, so that's just the way it is, and so that's the clearing process, right? So. I got stopped out on those, and I cut a bunch of them off. Some of them actually, funny enough, like some of them I'm still short. Like some of these names, I'm still short them. So I know those guys are working. Like I got short Overstock, WDC, still short that guy. Short oil names, so short still short COP rig. So still short a number of names. I actually tried shorting Asia again, like emerging markets. But I cut that for break even today because I didn't want to hold that going into tomorrow. So, anyways, any of that, I don't need to explain all my trades, but I think that's a great question. So the whole point is how quickly can we turn our bias, right? Because that is just a bias at the end of the day, and that's I think it's a very, very valuable trait. how can we remain cognitively flexible so that we know we can stay on the right side of price, right? So great question. Okay, how many trades per day do I take? That's something I usually take about, on average, about 10. That's probably my number. On average, about 10 trades a day. Yeah, because I look at a pretty big basket, and so yeah, tends to be like if I'm looking at 5 stocks, then I'll probably take 2 trades in those 5 stocks a day. Yeah. Okay. I still have a bias to the downside due to the trade war. Yeah, absolutely. There's that bias. I have that bias as well. I think right now my bias is to be risk averse due to the headline risk. So that is a that's the for me the um the difficult part to navigate is you don't know what's the next shoe to drop, and unfortunately the markets are gapping a lot, right? So that's the hard part, is managing your own gaps. So there's a couple of things you can do about that, right? Either elect to just trade intraday, but sometimes you get paid for overnight risk, right? So we're getting paid for overnight risk once again. The markets are gapping up, and if this ends up being a bottom, like we had, this is not a perfect bottom because I don't think enough people got trapped. We had the kicker patterns that did hurt people, but I like the bottom more we had in January because we had full time from alignment right away. But if this thing works, then yeah, people are going to have to cover and get back long really fast. Because we see some of those cloud names, man, some of those cloud names are so strong that these guys are going back to all-time highs. So we need to look out for some of these names. Look at Shop, man, back to all-time highs, like May never happened, right? So yeah. IB not the best for analysis. I'm not sure what that question is there. Okta, yeah, that's another good one. Exactly, Okta. Look at Okta. Yeah, tech stocks really hard. Another good one here. Look, kind of like staples are really strong right now. Like look at stocks like KO. Look at Coca-Cola. Back to all-time highs. Oh, it's not all-time highs, is it? Yeah, it is all-time highs. That's a 12-month chart. That is a 12-month chart on KO. So that is all-time highs. Nice job, KO. Slow and steady. The Walmarts of the world. These guys are just edging higher, right? Just going back up. So in this environment here, where they're talking about lower interest rates, some of these slow and steady stocks, these value stocks have potential. Okay, Okta, yeah, that's a nice one. IB not the best for analysis. Okay. Yeah, so the bias, I think I would share, how I try to keep my head straight is just follow price, right? And have an understanding of the fundamentals, but ultimately I'm letting price dictate which way I'm going to go. And the way I try not to get too chopped up, because you don't want to be too responsive to price, or maybe more better put is you don't want to be too reactive to price, because if you're too reactive to price, you're going to get chopped up, right? Because you're going to flip back and forth after every bar. So that's when I'm using the time frame alignment to try to keep me with the bigger patterns and the bigger trends. Okay. Yeah, exactly. Good one, Maris. Fast foods like McDonald's, Yum Brands, Dunkin', all doing pretty well. Yeah, exactly. It's these again, value stocks, all the consumer staples. Like look at the staples. So that's XLP. So you had a really, really strong run up. So there's May. It's nearly reclaimed May, right? So there's staples. That was May, ugly May, nearly back up there inside bar. We have a lot of month left to try to take all that. Utilities, man, they've been on fire. Look, all-time highs on utilities this past month. Only 6 days or 3 days into the month, trading month. All-time highs for utilities. So people chasing yield. So there's a lot of names of some of these utility stocks are on fire. Look at AEP, continues to make new highs. And again, all the utility names look pretty good. Actually, it's not NEE was the other one. Look at NEE, just powering higher. And this one here is another growth stock, or not growth, but value stock, CHD, Church and Dwight. Look at this, look, all-time highs on that one. Look at May for CHD. May's a blip. You didn't even see the it was barely a pullback for CHD. Now back to all-time highs. Oh yeah, good question. Yeah, exactly. Good comment. Yeah, IB is not the best for spread analysis. Absolutely right. Yeah, they don't have the best tools there. I know they have good tools around certain things, but certainly there are a lot of friendlier option trading platforms. You know, it's very hard to compete against the Think of the Swims of the world and, you know, the Tasty Trade ones. But yeah, you got out of vet. That was a good looking chart. Oh, sorry, I'm thinking the other one you shared with me, Claude. Yeah, this chart, unfortunately, VET, you're right. This one here looks like it is in trouble. Yikes. VET, what can you say about this one, huh? No bottom in sight. Ooh. Outside bar and down. Inside, then this guy goes into my reversal to the downside. Where's the low on this thing? Yikes. Yeah. Yeah, TGO, that was the one, huh? Yeah, unfortunately, VET not looking good. Outside bar and down now. Momentum to the downside. Yikes. Yeah, look at that weekly chart. That is scary. This is going to take out that low. I don't mean to laugh in the sense that I'm just laughing at that. Man, that chart's really, really, really painful. Just look at that. In all likelihood, they're going to try to find out. They create that broad information. I laugh because you always see this happen, right? The market always makes new highs before it rips everyone off. So it creates these new highs and lure in more buyers. And then because everyone knows that anyone who got involved here probably has their stops along their way, look how long it takes for this thing to make its highs, right? Because it takes, let's see here, this is December. 6 December to April to get to these highs, and then takes less than a month to go back back down, right? So, yeah, unfortunately, yeah, there's something. Yeah, these are the tricky ones because there's something doesn't look good with that chart. So I'm always reluctant about the fundamentals of companies when you see charts like that because that chart's really ugly. Yeah, TGO, that was a nice one that Claude shared. That chart is a beauty. Over the long term, that guy is going back. 5G player, right, Claude? 5G play. Terrago. Outside, big outside bar today. Outside and up on the 3-month chart. Yeah, look at that one. Look on the yearly chart. That's why it's so funny to see these longer term charts because they you know, we boil down to the really long time frame charts. They're so easy to read. Like here's the 12-month chart. Outside bar, inside bar, and down. Right? And then inside bar reversal back up. Who know, you know, could you know it's gonna go back up here? No, but certainly if you can go takes out that high, you're gonna go after that pivot and that pivot. Right? So that's still a decent trade just going from here to there. That's from like $5 to what's that? $7.65. That would have been a good trade right there. So yeah, that is a nice one, TGO. Nice trade on that. All right, guys. Well, any other questions? Otherwise, I think we've had a pretty productive evening. I don't mind going longer if anyone has more stuff they want to chat about. So this Bitcoin chart here, I was going to pull one last one. I just want to see what's going on here. Here's the issue with Bitcoin. Bitcoin. So as I posted in the chat room earlier this week, was it today or yesterday? Today, I think. I said everything's back to normal again. Equities are going back up and cryptos are going back down, right? So that's everything. Everything's back to being right in the world. Of course, I'm kidding because I like trading cryptos, but it seems to be the nature that they're sometimes they're inversely correlated. So yeah, as I said in the video, you got to watch out for that low getting taken out. This is what happens when you trade momentum, right? So this is momentum. If you don't know, when you start doing that Bollinger Band walk, look, small bar, inside bar, right? Actually starts here, outside bar and up, and it has nothing but higher lows for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row of higher lows. And it does the Bollinger Band walk. Once it falls out of the Bollinger Band and it cracks that low, that's going to come back down. So how far down? We don't know, right? So you have the quarterly open way down here. So you have a lot of room to maneuver still way down here. So, it's now, like I would not be looking to buy this thing yet until the new week rolls over. I just don't see it. There could be a buying opportunity here, but I don't see it. I just think there's going to be a natural ceiling here until you can you can take out that monthly open. But right now with the week up here as well, you have that time frame conflict. So the guys who are looking at weekly charts, they see red. Guys looking at monthly charts, you see red. Inside bar. Would that be so crazy if Bitcoin went inside bar for 1 month? That's not crazy, right? It had a 50% gain in May. So can you go inside bar and pull back down here? Yeah, you probably could. It's not the end of the world. And then maybe set up something for July. But in a world where we want everything right away, people may not be patient enough, especially if you're a FOMO crypto trader. Then you want things right away. You're gonna buy as soon as you want to buy it. But yeah, sometimes that wider perspective gives you a little bit more, a little bit more of an objective perspective on things. All right. Well, if there aren't any more questions, I just want to again thanks everyone for coming out tonight. Really, it was fun to hang out with you guys. Again, I'm gonna do more of these. Just taking the time out to hang out and hear questions, and hear what's working for you guys, what you're having a hard time with. Just a reminder, we do have for the folks in Montreal, we do have a Montreal Traders Meetup on the 26th of June. So make sure you come out to that one. That's a Wednesday night, 26th of June. And on the 22nd of June, there's actually a trading conference here in Montreal as well called the Modern Trader Summit, which I'm going to be participating in. So if you haven't signed up for that, if you're in the Montreal area on June 22nd, that's a Saturday. It's an all-day event. Check out my website. There's actually a code there. Actually, is there a code on that? Yeah, there's a code there. You can get 10% off on tickets. So if you don't know the code, I'll just tell you now. The code is EDGE, EDGE. So just go to the Modern Trader Summit site using the link on my website, and then use the discount code EDGE, EDGE. You get 10% off on tickets. Okay, so hope to see some of you guys on the 22nd. Should be a fun event, some presentations and a chance to hang out with other traders. So, yeah, you're very welcome. Yeah, my pleasure. It was fun doing this. 15%, yeah. There you go. Thank you, Claude. So, yeah, I hope to do a lot more of these, time permitting. Yeah, I know. It's too bad. I'm surprised. I'm really surprised you don't have more stuff like this in Toronto. Montreal it's a small trading community because we don't have as many people in Montreal, and we don't have the same financial center as in Toronto. But we have a good, close-knit group of traders. So really happy to have all you guys in the community. So if that's it, then yeah. Once again, thanks everybody. We'll do it again as soon as possible, and no more than a couple weeks. And until then, yeah. For the folks who aren't in the room, hope to see you in the room. Otherwise, folks in the room, we'll see you tomorrow. All right. Take care. Have a good night.